Hello, dividend growth stock investors. Colby here, the DGI Crab, coming at you with 4 dividend increases for the month of June. Now, the stocks that I'm going to be narrowly focused on here are the 60 stocks that I have selected for my channel to cover on. Only the highest of quality, blue chip dividend growth stocks with long track records of increasing their dividends, not to mention wide moats, plenty of brand recognition, etc. So you can sleep well at night purchasing stocks like these, knowing your dividend income is not only going to increase due to your contributions and the dividend reinvestment, but also the dividend increases that these companies typically dole out year over year. Now, I've separated the 60 stocks into 4 distinct categories or tiers based on the age and time horizon of the investor, which I believe is the most important metric for any individual dividend growth stock investor to take into consideration. What is your timeline to retirement? So I'm going to just jump right in. Please don't take any of this as direct financial advice, as I'm not a licensed professional and you should always do your own due diligence. Now, for tier 1, this is the 18 to 30-year-old investors primarily, where we're looking for large dividend increases year over year, but more than likely low starting yield. We've got a couple of them here. We've got Kroger, stock ticker KR, has increased their annual dividend from $1.28 to $1.40 per share, which represents a 9.37% increase. Pretty solid increase there from Kroger. And then United Health Company, stock ticker UNH, which for the last few weeks, since it's fallen all the way down into the $300 per share range, has been the number one most undervalued stock, not only in tier 1, but of all 60 of the stocks that my channel has. And it gave us kind of a small increase for their standards. They go from a $8.40 per share to $8.84, which represents a 5.24% increase. Now, in tier 1, for these younger investors, what we really want to have as a group, 10% or more dividend increases year over year. Kroger just fell short of that. United Health fell way short of that. But with Kroger, it's close enough. I'm not going to beat them up too bad about it. Kroger, when they're undervalued anyway, are typically going to be yielding comfortably above 2%. So if you're getting a 2% starting yield and a 9.5-ish% dividend increase year over year, add those two numbers together, it's about 11.5%. That's a pretty good double-digit dividend growth compound factor for the younger investors. For United Health, yeah, the 5.24% is disappointing, but they're yielding right now nearly 3%. So you could take the higher starting yield that you're getting when you purchase them right now and pairing that with a bit of a slow dividend increase, it's still a dividend increase. United Health typically is going to be doing much larger increases than this, but with all the trouble that they've been going through over these past few months to a year, I am perfectly fine with a 5.24% dividend increase. And it's not over yet. We've still got a couple more quarters to go. Perhaps United Health, as they continue to navigate through these challenging times, might give us another small increase in between now and the end of the year. Who's to say? We'll have to wait and see. But I'm encouraged that United Health did still increase their dividend by above 5%, even though it's shy of the target range for what I want for a younger investor. All right, guys, for tier 2, we had one stock in the tier 2 category give us a dividend increase, and that is Caterpillar, stock ticker CAT. They've gone from $5.64 per share per year to $6.04, which represents a 7.09% dividend increase, which is right in line with what I want to see from the tier 2 stocks, where you're typically going to be buying stocks in the 3% yield range, maybe 3.5%. With a good high single-digit annual dividend increase year over year. Caterpillar has done this with that 7% increase. Their stock has been absolutely on fire for a little while now. They are not an undervalued stock by any stretch of the imagination as of the time of this video, but a great stock, solid increase. As high as their share price has gone, I would have thought maybe they could have done even better than 7%, to be quite honest with you, but I'll take a 7% dividend increase from a tier 2 stock each and every time. Great work by Caterpillar. Now, unfortunately, tier 3 are 42 to 53-year-old investors. No increases out of the tier 3 stocks for the month of June. The previous month of May was a big week or a big month for the tier 3 group. So this time around, nothing to report from tier 3. So you'll just have to wait until next month for your next passive income dividend increase. And then finally, tier 4 for our 54 and older investors. Once again, back here reporting on Realty Income, stock ticker O. Realty Income, I report on these guys a lot every single time I do a monthly dividend increase report because Realty Income does multiple small dividend increases every single year. Most of the time, they do an increase at the end of each quarter. So, March, June, September, December. Some other times, they sprinkle some in different months as well. Their most recent increase, they go from 26.85 cents per month. So this is a monthly total here, 26.85 cents per share per month. And they are going up to 26.9 cents. So that represents just a 0.19% increase to their dividend. But if we go back and look at the start of the year, going into 2025, Realty Income on an annual basis had paid out $3 and was on pace to pay out $3.06 every year in annual forward dividend income. And with multiple dividend increases already in this 2025 calendar year, they have raised that up to $3.23 of forward income a year. So far, that represents a 5.5% increase to the Realty Income dividend. And for a stock that has not exactly been on fire in Realty Income, which you could say the same about most of the real estate stocks, this is pretty solid, especially if you were adding to your Realty Income position earlier this year when the stock was trading a little bit lower and it was yielding in the 6% or higher range. You get a starting yield of 6% and a 5.5% dividend increase. That's a great combo factor there. We're up to that 11% range, which is what we're kind of looking at from a growth perspective for the younger investors in that tier 1 category. So very happy for Realty Income. While their share price has not been great, their dividends just continue to increase. They pay those out monthly, everybody's favorite monthly dividend paying stock. So that is the list for the month of June, you guys. 4 out of the 60 have increased their dividends, and I'm keeping a very close eye moving forward on the increases for July, and I'll be back in early August to let you know how we did in July, but not a bad month of June. 4 dividend increases, 3 out of the 4 tiers covered, and really outside of just United Health, which was the small one of the group by their standards, and even that one, there's a silver lining behind even a small increase out of them. This is a pretty good group of 4 as far as some good dividend news is concerned. So congratulations if you own any or all of these stocks. Let me know what you think about the increases, and are there any coming up in the month of July that you are looking forward to? And what was your biggest dividend increase for the month of June? Let me know down in the comments below. Email me your questions to dgicrab@yahoo.com. I would love to answer any questions that you may have as a DGI investor. And finally, like and subscribe. It helps support the channel, and I will see you next time.